Hi, I'm Mike Richter, and today we're going to be talking about building and repairing credit. We'll answer three key questions. Things like, what is credit? Why is it important? And how can I get it or repair it if I've got bad credit? So let's move on. What is credit? Well, credit was originally an agreement between workers, usually farmers, and store owners. And usually the idea was a farmer would need to get goods throughout the year, and he would be able to pay off his credit to the store at harvest time. And how it worked out really well for the store man is the farmer wouldn't be able to buy things otherwise if he didn't extend credit. So it made the store person able to be able to sell more things than he would have otherwise, because fewer people would have access to ready money to sell or to buy things from him throughout the year. So if they were to extend credit to trustworthy people, right? Credit always comes with trust, and then they would be paid back at the harvest time. So nowadays it's more of a relationship between you and banks and other creditors. And for the purposes of a credit report, what your credit score is, there are five major factors, and we'll get onto that here shortly. So what is a credit score? Well, a credit score is a number that gives you an idea of how good your relationship is with credit. And there are five main factors. And the first factor is payment history, and that accounts for 35% of your credit score. And basically, it's answering the question, do you pay your debts, and do you pay them on time? So depending on how you pay and whether you pay on time, whether you pay early, those things are factored in. But if you have late payments, 30, 60, 90, 120 days late, they'll show up under this portion of your credit score. Next, we've got the second element of your credit score, which is credit utilization, and that accounts for 30% of your credit score. Credit utilization also happens to be one of the biggest controllable factors that you have to help improve your credit score month over month if you have bad credit. And basically, it's how much of your credit are you using for revolving credit accounts. So we're talking about credit cards mostly, and if you have a credit card, say, with a $1,000 limit, what they're looking for as credit reporting agencies is they're looking for you to have a statement balance every month of 30% or less of your total credit limit. So say you have a $1,000 credit card. If your statement balance is $300 or less, you're going to be looked at very positively in this factor of credit scoring. Now, ideally, you have your statement balance at 10% of your credit limit. That way it shows that you're still actually using it, you're still having something showing on your statement month over month, and that reflects well on you. What reflects poorly against you is, say you have that same $1,000 credit card and you've got a balance of $900 or $980, or hey, you're over your limit. Each of those kinds of things are going to have a negative impact on your credit score. So the idea here is, are you reliable in using your credit wisely? And that's kind of the question that's being answered with this credit utilization portion of your credit score. Now, the third part of your credit score is the length of your credit history. Now, this is the one that most people have the hardest time with, especially if you're starting from nothing in terms of credit. Well, it's hard for you to build credit if you don't have credit accounts, right? Now, one quick tip for those of you that are just starting to build credit: do not go out and get a whole slew of credit cards just to get more credit. You want to be very careful with how you use credit so that you don't get overwhelmed and put yourself into a financial hole. My recommendation is to start out with one personal loan and one credit card. And usually you can't start with a credit card that's unsecured right away. You might have to use something called a secured credit card, and you can ask at your local bank for a secured credit card. And all that is they take some money, so say $500, and they put it in a certificate of deposit, and they issue you a credit card with a credit limit of $500, that amount you put in. And if you fail to pay your credit card and you default on it, they take that $500 certificate of deposit and you lose your money. Now, the cool thing about it is, after about 6 months or a year, if you were doing really well, not only paying on time, but showing good credit utilization, so in the $500 example, making sure that your statement balance shows at about $50 a month, maybe $150 at the most, after 6 months to a year, you should be able to get a regular credit card without too much of a problem. And as far as a personal loan, you should be able to sign for a personal loan. It'll have a pretty high interest rate to start, but if you're looking to build credit history, that's one way to go about doing it. Let's see. The fourth element of your credit score is the different kinds of credit you have. Now, for the purposes of a credit score, there are really two big kinds of credit that they're looking at. You're looking at installment payments, so that's something like a mortgage or a car payment or a personal loan payment. And the second kind is a revolving credit balance, so something like a credit card or a line of credit. Those are the two basic kinds that they're looking at in terms of types of credit. And the fifth and final element of the credit score, let me go back real quick. All right, in terms of length of credit history, that counts for 15% of your credit score, and types of credit, that counts for 10% of your credit score. And the credit inquiries, the last bit, counts also for 10% of your credit score. Now, number of inquiries, typically they're looking at a 12-month period of time, and if you're looking for credit several times throughout the year, your credit score is going to take a little bit of a hit on it. However, if you were looking for one specific thing, like a mortgage, for example, and you do all your shopping around for a mortgage in a 30 to 45 day period of time, and you're just looking for mortgages, the credit reporting agencies are going to understand what's being done, and you won't be hit too hard on your credit score. So if you end up having mortgage companies or banks tell you that by going somewhere else to get your credit or to get looked at for a mortgage, and you might hurt your credit, usually they either don't know that there's a 30 to 45 day period of time, or they do know and they're just trying to keep your business. So make sure that you understand how things work with credit so that you don't get scared into deals that aren't for your financial benefit. So why is credit important? So credit scores let you know how much the banks trust you and how much of a risk they think you are. Because with credit, every time somebody extends you credit, there's an element of trust. And that credit score is kind of that way of telling you how much they trust you. Now, something that you should know is banks hate risk. They hate it. They just can't stand it. So you can expect to pay more if they think you're risky. So it behooves you, if you're looking to get loans from a bank or credit cards or anything that requires credit, it behooves you to have a better credit score. Now, don't get me wrong. That doesn't mean that you can't buy things without credit. That's not what I'm saying. What I am saying, though, is if you expect to use the normal way of doing things in terms of bank loans, then credit is going to be a piece of that puzzle. So you need to be aware of that. Now, what does it mean you might pay more if you have a lower credit score? Well, some tangible examples of that might be you pay higher interest rates. Maybe you have less than ideal terms. Say you have maybe not so good credit and you're looking for a credit card, you might have an annual fee associated with maintaining your credit account. Whereas if you have excellent or outstanding credit, then if somebody asks you to pay an annual fee, you just look the other way and you say, man, there's no way I'm going to go with that credit card, and you move on to something else because you know that you can get better with your credit rating. Now, other things that credit scores can help you with is if you have good credit, it can help you when you're applying for a job. Maybe some employers are looking at credit history and credit scores as an indicator of how good you are with your finances, and then kind of using that as a way of weeding people out of their selection process. If you're looking to rent an apartment, they might pull your credit score so that they can tell if you pay your bills on time. That way they know if you're a safe bet in terms of renting. Because the bottom line is apartments are there to make money and give you a place to live. And if you've got terrible credit, then you've got a risk factor for not paying your rent. So why would somebody want to rent to somebody that has bad credit? And there are lots of things outside of loans that credit can be applied to. In fact, much throughout my career in the military, I had a security clearance, and something that was important about that was there was something that we needed to do, and that was to have financial responsibility. And having our credit looked at on a regular basis was something that can motivate us to practice sound financial discipline. And that's something that you need to think about if you're looking into going into a field that requires some kind of sensitive security clearance sort of deal. Now, how can I get or repair credit? Well, the bad news is you can't fix it in a month. If you've got your credit score and you've been denied for loans today because you got a credit score of like 400, well, chances are, unless there have been some crazy errors on your credit report, it's very unlikely that you'll be able to go from 400 to 750 in the period of time of 1 month. But the good news is, by starting good habits today, you can be well on your way in no time. So what if you don't know what your credit looks like? Well, you can get a free copy of your credit report at annualcreditreport.com. It's totally free, and you'll be able to get one copy of your credit report from each of the 3 credit reporting agencies once per year through that website. And now let's go through 3 steps to clean up or build your credit. So step 1, you want to identify your credit killers. So once you have your copy of your credit report, you can do this step. So if you don't have copies of your credit report, go to annualcreditreport.com and get your copy. Now, the whole point of step 1 is we're looking for errors and major credit factors. So errors are things like there's an account that shows up that you never applied for, so that's clearly something wrong. Or maybe you made a payment and your bank or your credit card or whatnot has reflected that payment, but for whatever reason it's showing up as a ding against your credit report. Well, that's something that you can contest. We'll talk about that a little bit in the next step. We're also looking for things that fall under our major credit factors. The first one, we want to look at our payment history and see if there's anything significant in there that could be wrong or that we can get back on track. Second thing, of course, is credit utilization. If we see that we're not using any credit on one of our credit cards and we're maxing out the other credit card, that's really hurting us in the category of credit utilization. Maybe we should take some time to pay down the one with super high balance and maybe use the one with no balance for a little bit so that we can kind of even things out and have our credit utilization piece of our credit score reflect much more positively on ourselves. And finally, length of history. If you see that you've got one credit account that's really long and then you have a lot of small ones, chances are you don't want to apply for new credit if you've already got credit cards or other things like that, because that'll end up dropping your average length of credit history. When you're looking at credit history, it's looking at 2 major factors. The first one is how long your longest credit history is. So say you've got a student loan from who knows how long ago. Well, it's probably not a bad thing that it's there, because that's probably the initial backbone of your credit score. Unless you've been late or defaulted on it, then it's really bad for you and your credit score. But The second element of the length of history piece of your credit score is what is your average credit length. So if you've got an account that's been open for a year, an account that's been open for 6 months, and no other accounts, your average length of history is 9 months. Okay? And what happens if you were to open up a credit card right there in the same circumstance? Well, now you've got one account that's a year old, one account that's 6 months old, and then an account that's no months old because it's brand new. Well, now your average is 6 months. And that's going to bring down that length of history portion of your credit score. So you want to be very careful of getting credit when you need it, not just because you think you need it. Obviously, when you're just starting out, you don't have a length of history anyway, so get a couple of accounts open, preferably one installment account and one revolving credit account. That way you've got one of each type so that you have a variety of credit types. So now step 2 is where we clean up our credit report. This is where, after we've looked through our credit report and we see that there are some errors, we need to send out disputes. And in the description section below, I've got a template for you on what you can use to dispute an error on your credit report. And basically what you need to do is you send a dispute on an account to the credit bureau and give them proof as to why it's an error so that they can clean it up. And once again, there's a template down in the description below for you to be able to use that if you need to make disputes. Now the trick is you need to, say you've got the same error on all 3 of your credit reports, one from Experian, one from TransUnion, and one from Equifax. Well, in that case, you're going to have to send 3 separate disputes to all of the credit bureaus, one for each of them. So that could be a little bit of a hassle if you have a lot of errors on your credit report. You also want to make sure that you're not disputing a whole bunch of them at once. So say you've got 6 errors on your credit report on each of them. Unless they belong all to the same company, you want to give it space. That way they don't look at your disputes as cases of somebody making frivolous disputes. And there's certain elements of credit law that allow them to disregard what they would consider frivolous disputing of credit reporting. Now, your credit reporting agencies, they don't always share, so there may be errors on one credit report that don't show up on the others. So you want to be very careful when you're disputing that you know exactly why you're disputing it and to whom you're disputing the errors. Now, moving on to step 3. This is easily the best way for us to improve credit scores if there's a habit or a behavioral matter that needs to be changed. And that's starting a positive history, right? So if you haven't been making your payments on time, start making your payments on time. That way it really improves that first section, that your payment history. That's really helpful for you, especially if you've got a bunch of late payments. You want to take time to adjust your balances on your revolving credit to be less than 30% of your overall credit limit, or even better, to 10%. Now the thing is, all that matters on this is your statement balance, because your statement balance is what is reported to the credit agencies. So make sure that by the time your statement closes out every month, it's right there in the 10 to 30% range. You also don't want to open new accounts for the sake of opening new accounts. We talked about that a little bit earlier, but by only shopping for accounts when you need them, that helps you with that credit history piece of your credit score. And finally, take care of outstanding collection accounts if you can, right? You may be in a financial situation where you just can't take care of collections. Well, you want to keep going with the things that you're doing right and turn things that you're not doing quite right as you can and just weave it into your natural practices. But you definitely want to take care of all of your responsibilities over time. And the thing about it is, with some creditors, you may be able to negotiate for them to take the the reporting ding off of your credit report, but any negotiation that you do, you want to make sure that you get their part of the bargain in writing, so that in the event they don't follow through on their promise, you can hold them to their word with whatever letter they send you with that promise. So just to recap, we talked about what is credit, and credit is basically trust between you and the financial institutions. It originally came up between merchants and workers so that workers can get things throughout the year, and as they can pay off their debts. So really there's an element of trust anytime there's credit involved. Why is credit important? Well, credit is what you need anytime you go to a bank or a financial institution for anything. And it dictates what your interest rates are, what your terms are, and what kind of loans you can get. And we talked about different things that you can do to enhance your credit and repair it. We talked about identifying your credit killers once you have your credit reports from annualcreditreport.com. We also talked about cleaning up your report and sending disputes using your own method or using the template down in the description below. And starting positive history, doing the right things with credit so that your credit improves over time. So thank you so much for taking the time to watch. Go ahead and give this video a like if you found value in it. If you feel that your friends could get any value out of it, by all means, go ahead and share. This is out there for all of your benefit. If you'd like to hear more from this channel, by all means, go ahead and hit that subscribe button. And thank you so much for your time. I hope you have a fantastic day.